So tonight we have with us three ladies from US Bank. We have Heiley, Allison, Cassie.
Yeah.
Perfect. I'm bad with names, but I got that one. So we just want to give a warm welcome, and you guys can take it away.
Awesome. Thank you so much for everybody being here today. We're going to go over the path to smart banking. First, we're going to go over savings, then we'll go over budgeting, credit wellness, debt management, and then fraud and security. So we did get introduced, but we'll talk a little bit more about ourselves. As Amanda said, my name's Heiley. I've been with the bank 4 years now at our St. Cloud Midtown location. Within the bank, I have grown a new sense of smart banking. I started right after high school, so I kind of started from square one and I built my way up. So that's my testimony.
My name is Allison. I've been with US Bank for 8 years. I started as a teller and then worked my way up through being a banker, and really was craving the more interaction with our clients to be able to help them with their finances. And
I'm Cassie. I work at the St. Cloud downtown location. I've been with US Bank for 2 years, but I have been in banking for 5 overall. I've grown from a teller to a personal banker, and now I kind of specialize in credit and building credit and learning how to better use your accounts to your advantage.
Perfect. So let's start with, what is a habit? Brushing your teeth is a perfect example of a habit that you probably do without much mental effort. You might have specific cues that tell you it's time to brush your teeth, like your toothpaste and your toothbrush sitting on your sink. You probably connect it to other activities like taking a shower or washing your face. You might be so good at brushing your teeth that you might not even think about what you're doing while you're doing it. There are bits of technology that can also make the task more enjoyable, like flavored toothpaste, electronic toothbrushes. What is saving money for your future, and how can we make it that simple? What if a budget was as predictable and easy to follow as brushing your teeth can be? With smart financial habits, you can create better budgeting that help you reach financial goals. So let's talk about what that looks like. For us, SMART starts with saving for a rainy day. We usually say to aim for 3 to 9 months worth of total expenses based on your circumstances in a savings account for any unexpected things that may come. Managing your budget. A budget is an ongoing account for your household income and expenses. You can make budgeting a habit if you have a lot more control over your money and being aware of what you have coming in and out. Use a budget calculator to learn where you have more room to save, and those are accessible on usbank.com. Also, access your credit. Get in the habit of checking your credit score regularly. 2 to 4 times a year is what we usually say. US Bank customers can do this for free at usbank.com/free credit score. And you can get a free full report from the 3 credit bureaus once a year. You can try this tip to check your credit in the app every time you replace your toothbrush. Then we say to try and reduce that debt. Resolve to pay your credit card full every month. So that is a practice we try and get you to implement. Then track your online security. Set up an account alert for your bank to notify you if someone tries to charge your card, change an address, or a phone number, sends money from account, all of those different activities. Make sure you use antivirus software on a PC or computer, and strong passwords for any mobile websites or online accounts. And then stay up to date with the common scams that are out there. We will always try to keep people informed with that, so anytime you come into a branch, we may share information with you about that. And you can learn more at usbank.com/smart-habits, or you can scan the QR code on the screen to learn more through your phone. Then we want to ask, when you think about budgeting, the why behind it. When you connect a goal to a purpose and you put that purpose into words, it makes your goal more powerful. Building that emotional connection will help you stay focused on the goal. If you have trouble answering why, that's worth exploring too. Are you doing something because it matters to you, or because it's an expectation given from someone else? The next question we like to ask is when. You're always going to be working towards multiple goals. Some are short-term and some may be longer-term. Some goals are foundational to others. If you want to start a business, for example, you will want to get your budget in shape and pay off the debt so you can get financing for your business when you're ready to begin. This may bring you back to your why if the goal of paying off debt for its own sake wasn't very inspiring. Maybe it may feel more meaningful when you imagine your future as a business owner. The third question we ask is, how much will it cost? Not every goal has a financial component, but many of them do. If you're saving for a house, your biggest expense up front is going to be your down payment. But you should also consider the other purchases you'll make in the short term, the moving costs, furniture, the first big trip to the home improvement store. It can seem overwhelming, but it's also very empowering when you see your life goals alongside each other. Your life may not turn out exactly like the timeline that you're setting, but you always have permission to change it. It's important to know your goals and why they matter to you. Even people with the best financial habits often haven't put the why behind their goals. This is important because we know that life doesn't always go as planned, and by emotionally committing to these goals, it can often help you maintain the right habits to come over any setbacks. So, why is it important to save your money in a bank account instead of keeping it at home? The first one is safety. Bank accounts often offer a higher level of security for your money compared to keeping it at home. Banks have security measures in place to protect your funds from theft, fire, or natural disasters. Most bank accounts offer interest, allowing your savings to also grow over time. Some saving accounts and certificates of deposits earn money or interest. If you have a loan through a bank, monthly payments include interest, which can vary depending on the type of loan. Interest works both for you and also against you, depending on where your money is. In a deposit account, interest is earned. Your balance grows over time because the bank pays you to keep the funds there. With credit, interest is charged. You pay extra when you carry a balance because the lender is charging you to borrow their money. With savings, you deposit money into an account at a bank. And in exchange for providing those funds to the bank in turn gives you a percentage of those funds back in interest. So it's more secure than keeping your money in cash somewhere in your home, plus the bank pays you for keeping the money with them. There are generally 3 different account types for saving products. The first is a savings account. This is relatively simple. You can open the account with a small amount of money. With us, it's usually around $25. And over time, you deposit money into the account when you have extra money to save, and you withdraw the money from the account when you need the extra money to spend. Next is a money market account. The difference between a money market savings account and a regular savings account is the money market savings account usually pays a higher interest rate. But in return, the minimum balance requirements are often higher. Usually with us, it's around $10,000 or more. And if your balances fall below the minimum, fees may also sometimes be higher. The product is ideal for someone who's planning to save larger amounts of money, and that's usually those tens of thousands of dollars, potentially for things like a down payment on a home. And the third type is a savings account of a certificate of deposit, often referred to as a CD or a time deposit. With a CD, you agree to deposit a certain amount of money for a specified period of time, and you agree to keep it at the bank and not touch it for that entire time. So, for example, if you open a 12-month CD today, you agree not to withdraw the money until 12 months from now. In return, the bank is usually willing to pay you a higher interest rate than what you receive on a savings or a money market account. Since the bank knows with a higher degree of certainty that the funds will be at the bank for 12 months. So keep in mind that if you need to access the funds early, there can be early withdrawal penalties that can reduce the earning on the account. This product is ideal for someone who has funds that they don't know what they're going to do with it, but want to get a little bit more on return. The values, the certainty of the FDIC guarantee, so your money is always safe and protected through the CD. And if you want a higher interest rate, then you would receive on a liquid savings account.
US Bank also has two different types of CDs. We offer the standard rates, which can be a much lower rate, and then our specialty rates. The lower one for the standard rates, they are only $500 minimum deposits and higher, and then the specialty rates are $1,000 and higher. So that is also something as well.
So savings is a great choice for a short-term and medium-term goals because it's secure, it's liquid, and it won't lose value. And you're earning a little bit of interest while it's sitting there. Savings accounts are great products to use for an emergency fund. For example, because the balance requirements are often usually low, so you can move money in and out frequently without having to worry about dipping below that minimum balance requirement to waive fees. This is a great product to pair with a checking account so you can move money easily between the two accounts depending on your needs. Money market savings, the minimum balance is usually around that $10,000 as shared. So you use this account for larger amounts of money that you're saving for something significant, such as a vacation or down payment. And because we're talking about investing as well, a money market savings account can be a great product to pair with an investment account. CDs, even though you won't touch the money you put into the CD until it matures, the good news is that there's a wide variety of CD maturities, from as little as 1 month to 7 years, and it can even be longer sometimes, and everything in between there. So if you have money now that you're planning to save and you're not very sure how to use it, and you know you don't need that access to it for a certain period of time, then a CD might be the right fit for you. And the interest rate you get paid for the CDs can be relatively good, especially in the longer terms, like a 12-month and beyond. So if you're saving up for a wedding, for example, which you know is about a year or so away, you can earn some more money meaningfully by putting it in that CD. So here are some tips to help your brain build better saving habits. Friction is a scientific term for a small amount of effort that makes you less likely to do something. You can reduce friction by making it easier to save, and you can add friction by slowing down your spending. One way to add friction is to remove those shopping apps or saved credit cards from your phone. Accountability is another meaningful and useful tool. When you're feeling highly motivated, like right now, you can schedule your future self for activities like meetings with a goals coach or a financial advisor. Once that meeting is on the calendar, you have another person involved, you're more likely to follow through with those goals. You can also enlist an accountability partner, a friend or family member, who's willing to keep you honest and help you work towards that goal. It's important to stay emotionally connected to your goal if you're saving for a new home or other large purchases because you want your kid to grow up there too. Keep a photo of your kid in your wallet in front of your credit card, and if your goal feels so big that you can't quite imagine getting there, break it into smaller chunks or milestones. When you've hit one of those milestones, celebrate it. The feeling of accomplishment will keep you motivated and moving forward. Make it easy to put money into longer-term savings and more difficult to get it out of longer-term savings. Most banks, including US banks, has automated features available in their mobile app to keep it easy and frictionless to move money from your checking to your savings account. Now, on the other hand, when you have money already in longer-term savings and you want to add friction to make it harder to get to, so you're disciplined in achieving your longer-term financial goals, a great way is to introduce a type of friction and increase the amount you contribute to any tax-deferred retirement plans you have, such as a 401k. This will help limit how much money is available for extra spending, while also potentially reducing your taxable income. If it turns out you need more money in a budget, then you can decrease the contribution if need be. But since there are at least a few steps you'll need to take in order to do that, you'll slow yourself down so you have the time to reflect on whether it is the right decision or not in your current situation. So, things we like to myth bust is a saying of, I need to have 3 to 6 months expenses. A lot of financial experts recommend setting aside 3 to 6 months of expenses. This recommendation is based on the average amount of time it takes to find a new position if you lose a job. And it's a great goal if you're already financially stable and having debt, and having paid off your debt and having money set aside for retirement. Next one is, I should use my savings for serious emergencies. Many people feel guilty about using the money that they have in their rainy day fund. They think it should be only used for serious emergencies or on very rare, once in a decade type events. But that's not the case. If you don't have money in your checking account to cover a payment, the rainy day fund should be used as that, as a first resort and not a last resort. But you can feel good about using your rainy day fund in a non-emergency situation too. For example, some people work jobs where they only get paid once per month, or even less frequently than that, even though most of their bills are due monthly. So people in that situation can use their rainy day fund to smooth over cash flows. In other words, saving more during times when you have the cash inflows than outflows, and then dip into your rainy day savings funds during times when you have more outflows than inflows. As a general rule, if you're being thoughtful and intentional about how you're using your rainy day fund and staying disciplined about adding to the fund frequently, you can use the fund confidently without feeling guilty or ashamed. Rainy days are always bad. When you're looking to build your rainy day savings, think about all of the things that life has to offer and how great you'll feel when you're able to afford those surprises that come your way, no matter what shape they come in. One of the most foundational goals that everyone should be saving for is that rainy day fund or an emergency fund. Think car repairs, doctor bills, or broken appliances. Maybe your kid makes the basketball team and you need $100 to pay for uniform and registration fees. Or maybe you just got invited to your friend's wedding and you want to send a nice gift. You may not know exactly what you're going to need it for, but you want that money to be there when you need it. A regular savings account is a great choice for this goal because it's so flexible and easy to access the money when you need it. How much to keep in that account will depend on your financial situation, and a common rule of thumb is that 3 to 6 months of expenses, but even $1,000 can make a meaningful difference in the ability of whether the unexpected goes without going into a debt. Many people feel guilty about using the money in their rainy day fund. They think it should only be used for serious emergencies or on those rare occasions, but that's not the case. If you don't have the money in the checking account, remember, you can use it as a first resort and not that last resort. So, regardless of your income or life stage, everyone has a savings need. It doesn't matter if you're older or younger, very wealthy, or just starting out in life. Everybody needs to save money. A savings account is designed for money that you want to set aside but also be able to access daily. The most important part of saving is establishing that rainy day fund. This fund serves as a very important function. You add the money to it whenever you're able to save. You take the funds out when you have a payment that can't be covered with the funds in the savings or any other unexpected expenses. We don't want you to make it too easy to access that rainy day fund, and you don't want to spend this money without realizing it. So keeping it separate from your checking and everyday spending will make the biggest difference. You can set a nickname on the savings account and call it rainy day fund or something other. But the most important thing is that the funds are there. If you don't need any rainy day funds set up yet, don't feel bad. The great thing about this is that it's never too late to start saving. And as you'll find out, making even small changes in how you save can make the biggest impact over time. And the best part is US Bank offers savings tools that are super easy to use and can help you continue to save consistently going forward. So identifying a timetable and being spot on with the completion date is not as valuable as identifying and, most importantly, envisioning yourself as achieving a set goal. The timeline itself fuels the empowerment of achieving the goal and supports one accountability along the time. So next, look at all the moving parts of your finances to guide you in the best approach to paying down debt while staying aligned with living and breathing budget. Determine your comfortability risk, and then a foundational component is strong and clear lines of communication for you and your partner, not only on set for your goals discovery process, but throughout every step. Lastly, take advantage of personalized resources that are available not only to fuel your journey, but also support achievement for your goals centric to your why. We're here for your help no matter where you are in your journey and what goals you may have. And most importantly, remember to celebrate your successes. It takes a lot of work to get there, and we understand that. Alrighty, and then we will go over budgeting.
Okay, I'll talk a little bit about budgeting. So basically, what's a budget? So it's basically an estimate of like income and expenses for a period of time for the future. And then a budget, depending on the type of budget you have, you can itemize it. So you can be really specific with your budget if you wanted to, or you can have more like general categories. Everybody kind of starts out and does their budgeting a little bit different. So sometimes you can try a couple different ones and kind of see what works for you. And that budget is basically like a plan. Okay, one thing when you are like creating your budget, you really want to take a look at like needs versus wants. So it's helpful to prioritize what you truly need to set those goals. So when you're thinking about what you need versus what you want, you'll be thinking about like what you can and can't live without. And it's important to prioritize those needs over the wants. So some of the needs examples are like housing and groceries and like insurance. And then some of the wants like the latest phone or like going on a vacation, stuff like that. So a common budget that we like to use at the bank is the 50-30-20 rule. So 50% of your income, if possible, you want to go towards your needs. 30% towards your wants, so like fun activities, like if you wanted to like go out to eat or go to the movies or like the small weekend trip or something. And then 20% if possible, try to put towards like savings or any like debts that you may have. I can go to the next one. It's really important with the budget, like Heiley said, to focus on the positive. Really celebrate those small wins, because when you are just starting out with your savings, everybody's on a different journey, but when you're starting out, sometimes even hitting that small goal, you're like, I'm paying daycare, I can barely like save anything. So even if that's only like $20 a month, like that's awesome. Like, you're starting somewhere. Everybody has to start somewhere. So I got 3 kids myself, so I know that daycare takes a lot of our income. So just celebrating those small wins, even when you don't have much that you can set aside, is really important, something I'm passionate about. So this up here is an example of a budgeting worksheet where it can break down different categories. Like I said, that 50-30-20 rule of putting your money into needs, wants, and savings. This is just an example. There's so many places that you can find a budget. US Bank has it right inside their US Bank mobile app if you bank with us. Otherwise, usbank.com/financialiq has resources for finances for anybody, whether you bank with us or don't bank with us. And there's different like topics on there. It's not just budgeting, but like whatever your goal may be. There's a lot of different resources on there that a lot of people don't know about. That's available to anybody. Like I said, not just people who bank with us. So really cool thing that US Bank has to offer. When you feel like you do have that good handle on your money, and you know, like, okay, this is what my expenses are, like, this is what I have to set aside in that rainy day fund, you can start tweaking your budget a little bit more and seeing, like, oh, where can I maximize the different points? Like, oh, maybe I can put more towards a savings account, or like, okay, I feel like I got a handle on savings account, like, maybe I want to look into that certificate of deposit, because they're offering like a higher interest rate than my savings. So if you feel like you got that budget saved up in that savings, then you can start looking at other ways to really help your money start working for you instead of feeling like the tug of like expenses and stuff like that. So that is something we could do. Some common budgeting mistakes. Everybody, if you don't have a budget already set, sometimes you might overgeneralize some of the categories. You know, we put a lot of stuff into like utilities, so you have your basic utilities like, you know, your gas bill and stuff like that. But sometimes people start putting stuff like cable, streaming services, stuff like that, and like starting to really overgeneralize that. And a way to do like not overgeneralize that is to kind of be more specific if possible with your budget. Sometimes people can have a lot of different streaming services and you don't realize how much all those little different apps can add up. So if you're specific with your budget, it might say like, oh, hey, you have a lot of different spending in this category. How could you like reduce that? And then also unrealistic targets. So like looking too much into your past, you know, nobody's path to financial wellness is always great. So sometimes not focusing on like, oh man, I had an overdraft fee or something. Like, don't focus on that. Focus on like, okay, what can I do to then set myself up for the future? Maybe I'm gonna set a notification on my app. So a lot of different banks have like notifications that you can set up, so you can have like different balance settings so that you can move forward. Like, yes, mistakes happen, but like moving forward and really achieving that. The budget creep, avoid this mistake by doing budget tune-ups. Like I said, the first budget that you set up, it might not work. Maybe it was too generic, or maybe the categories didn't fit you very good. So then trying different things to figure out what really works for you, and something that you feel, like Heiley was saying too, it's gonna make it feel like more like you're brushing your teeth than a chore, like, oh no, I gotta type all this into my budget kind of thing. And then how to practice mindful spending. A lot of it is going to be like tracking your spending. So like using your bank's app to see like where you're spending in those categories and break it down. You can remove cards from your apps so you're not tempted to do like one-click buying. Sometimes it's too easy to do that impulsive buy. Sometimes if you leave it in your cart overnight, maybe you'll be like, oh, did I really need to buy that? And then maybe you're like, oh, I didn't have to buy that. You know, I could probably afford to put that money into my savings account. Maybe I'll do that this month, and if I still feel like I want it, maybe I'll splurge next month on it, something like that. And then Heiley also mentioned finding that accountability partner is really helpful. So sometimes it can be someone in this group here. If you found a friend and you guys are like, let's budget together, like that'd be cool. So yeah, that's what I got for that one. And then, like I was saying, for us at US Bank, we have a budgeting tool right in our app. Otherwise, usbank.com/financialiq has budget tools for everyone. Otherwise, also check your smartphone. There's lots of different budgets on there, and just find one that works best for you and see where it can take you.
So before I go down the credit rabbit hole, like these two touched on, the goals are a big part of everyday life. US Bank also does offer goals coaching. This is a free service to everyone, whether you bank with us or not. I use it. I have a fantastic coach. He talks with me every week, and we go back and forth, and we have regular check-ins, and he's helped me a lot with a lot of goals that I've had financially and just personally. So it's something to definitely look into, even if it's just a quick conversation.
Okay, so the basics. What is credit? So financial wellness works a lot like mental or physical health. It is a journey. It is not a race. You don't need to know everything or be perfect. You just have to start where you are and take it one step at a time. Credit can be really overwhelming if no one's ever explained it to you, and that is very, very normal. I'm going to break it down very simply and give you the tools to kind of track and feel more confident. And then credit wellness isn't about having a perfect score. Life happens. We get it. It's all of us. What matters is learning from those past bumps, understanding what's going to impact your credit, and give yourself some grace. It's all about steady progress, little steps that add up over time. So feeling confident with your money feels really, really good. And there are real practical everyday benefits to it. Having a higher credit score gives you more options, things like getting approved for that mortgage that you've been saving towards, or securing a reasonable car loan. Lenders use your credit score to see how risky it is to lend to you. Better credit can save you real everyday money. Even the tiniest little drop in your interest rate can add up over time. Money you don't spend on interest is money that you can use for things that you enjoy or invest in your future. Credit isn't just about borrowing. Landlords check your credit score before approving a housing. Some employers check your credit to get a sense of your responsibility. If you combine households with someone, your credit becomes part of their picture too, especially if you're trying to qualify for something bigger like a home. So the keys to building credit confidence: know your starting point. Before you can start to make progress, you need to know where you're starting at. So check your current credit score and review your credit report so that you understand what's going to help you and what's going to hold you back. Check your credit score regularly. Your credit isn't a set it and forget it kind of thing. Keeping an eye on your score helps you to catch those mistakes early, see your progress, and stay motivated. Build credit by using it responsibly. Credit builds when you show how you can handle it. Using a credit card for small, manageable purchases, paying them off, that helps create a solid history over time. Staying on top of your payments. This is the big one. Paying your bills on time every single time has a huge impact on your credit score. Even one late payment can set you way back, so consistency really pays off. And then chip away at that debt. You don't have to eliminate it overnight. Focus on bringing balances down little by little. Every single payment helps lower your credit utilization and boost your score. So what affects your credit score? Payment history. Paying bills late will negatively affect your overall score. Amounts owed. If your debt is more than 30% of your total credit limit, your score is going to begin to fall. Length of credit history. Be wary of opening multiple new accounts in the hopes of building credit quickly. This reduces your average account age and it's going to lower your score. Amount of new credit. Applying for too many lines of credit in a very short amount of time is going to lower your score too. And then types of credit. Having a well-balanced mix of different lines of credit can be very beneficial. A good credit score shows you've used credit responsibly over time. Late payments, high balances, and opening too many accounts can really hurt you. A hard pull is something that happens when you apply for credit too many times in a short period, and that can lower your score. A soft pull is when you check your credit or companies check for marketing, like a pre-qualification. Those don't hurt you. Debit cards, checking and savings activity, overdrafts, payday loans, those don't hurt you. Everyday things like a parking ticket, because don't look at me because I got them. They won't show up on your credit score unless that debt gets sent over to collections. Collections like unpaid utilities, medical bills, other past anything can appear on your credit and it'll lower your credit score. At the very end of the day, your credit score isn't about how you handle borrowed money, because not every financial move you make is going to do that. So the 3 credit bureaus. There's 3 major bureaus. They keep track of your credit history. They share that information legally with other lenders, insurers. People look at me funny when I say that. And everyone to evaluate your financial responsibility. You can get 1 free credit report from each bureau every year at the website on the slide. And then when you order your report, you're just going to verify some personal info, and then you'll be able to view, download it, or print it. What to do when you get your credit report. Look through it very carefully, line by line. Look for anything that doesn't seem familiar.
accounts you don't recognize, lenders you've never used, or any activity that looks suspicious. If you spot something wrong, report it immediately so that it can get investigated and corrected.
You
So
said you can do that 3 times a year?
you don't need to.
Yes.
Yeah, you don't need to do that, but that is just something that is recommended.
Right, and then doing it, if you did do it for 3 times for free, that does not hurt your.
It does not.
Okay.
So what is a credit score? A credit score versus a credit report. Your credit report is the detailed list of your credit activity. So basically like an assignment at school. Your credit score is the number based on that information, so it's your final grade. So the report is the work and the score is a B+. So what makes up your credit score? Payment history, it's the biggest factor. Pay your bills on time, good news for your score. Outstanding debt, the total amount you owe across credit cards, loans, mortgages, all that fun jazz. Utilization, how much of your available credit you're using. Aim for that 30% and under. Credit type and history, a little longer, more diverse credit history looks better to lenders. This is why building good credit habits early helps a whole lot. Recent inquiries, so each time you apply for credit and a lender checks your report, that's a hard inquiry and your score can dip each time. And then applying in moderation is the key. So why checking your score regularly is important. It helps you keep tabs on changes in your credit over time. You can catch mistakes on reporting errors because they can cause bigger issues. It's one of the easiest ways to spot signs of identity theft or fraud early. And no, checking your score does not make your score go down. So ways to start building or rebuilding your credit. Start small with secure credit. Secure credit cards or loans use cash as deposit as a collateral. They're a great way to build history safely. Make on-time payments, and over time, you're going to qualify for a regular unsecured credit. Consider co-borrowing very, very carefully. Common for young adults or new immigrants to America to co-borrow with someone who has established credit. Keep in mind, both borrowers must meet the criteria. A co-borrower's strong credit will not cancel out your low score, or limited history for the primary borrower. Use credit very responsibly. Pay on time, every time. Keep balances as low as you can. If you are struggling to make a payment, call your lender, because before it becomes a late payment or goes to collections. Lenders want to work with you. They want their money back, and they'll generally try and find a way to help you. So US Bank has a credit score tool that is free to all of our customers. You can find it within our app, and it is a very simple tool that will pop right in and you can see the general score. All right.
So that's not a poll, that's just a feature.
That is a
US
soft
Bank
poll,
has.
so it's just something you can look at.
Yep, it's not going to be exact because it's not a hard poll, but
Correct.
you'll get a really good rough idea of where you're at.
You get a generalized idea of where you're sitting. Okay. Fraud. This one is my biggest thing on the face of the planet. Online safety. For the love of God, do not click on random pop-up ads that you see on Facebook. Please. You don't have any idea how often I see it. It's every day. Multiple times. So verify those websites before putting in your card info. Use a credit card. This one's the big one because it can save your checking account, both your money and your banking information. Because if your debit card gets hacked, they have your checking account. If you use a credit card, you're using bank's money, and the bank is gonna fight for their money. Does that make sense? Because it made sense to me when I learned about it. Do not open suspicious or the too good to be true emails. They are in fact too good to be true. The best practice is, if it feels funky, it is. Never give out your information. When you get that phone call from the bank wanting you to verify your info, don't give out that info. Hang up, call your local branch, we will figure it out. Always, 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 always trust your gut. Your gut does not lie.
Awesome. And then just to save some time, we'll go over if anybody has questions. Otherwise, we've got a QR code to get started with learning more about US Bank and what an account can look like for you.
We also have all of our business cards on the table as well as a bunch of goodies. Please take all the things because our bosses don't want to see it back. Yes.
What questions you guys have?
Can you touch on high yield savings accounts a little bit?
Sure.
How is that different than other accounts?
So that's like where a high yield would be like the money market account. That one's where you're going to have a larger deposit into it in order for it to be a high yield percentage that you're getting back. So that's the one where you're typically with us, it's gonna be a $10,000 balance or more. Just because you're giving more, we'll give more back.
Do you know what your rates are right now for those high yields and your CDs?
Yeah,
So
it is
We base most of our rates on the accounts, the relationships, and then our savings account is actually one that you can build. So it has different tiers depending on how much you have within the accounts that you have with us.
So right now, for new to bank customers, we're offering, if you deposit 25,000 or more, a 4.25% on a money market account.
25 grand?
And then, right, but then we have our CDs. We have 3 different specials going on right now. Our best is a shorter term, actually. It's kind of reverse on what you typically see. It's a 5-month at a 3.1%. And like we said, that's a minimum of $1,000. So if you know you've got, it's not the smallest amount of money, but you know you've got enough to put in there and you don't need it right away, it's a good amount to earn some more on.
And can you lock in on that, the next 5-month rollover?
The rates are subject to change at any time, so when the 5 months come due, rates could change at that point.
And if they dip, you have to dip too.
If you want to keep it rolled over. When that 5 months comes due, you have the choice of either renewing or redeeming it, right? So if you're not interested in the rates at that time, you can take that money back out. That's yours to do as you please with.
And all CDs come with a 10-day grace period. So you have 10 days to, decide if you want to roll into a new term, if you want to just not touch it at all, in which case it'll roll into a standardized term, or if you want to take those funds out and do something else.
I will say with our, just our basic savings that we have, it pairs with our checking account. So if you have checking savings, you do get a benefit of having tiered interest rates. So based on how much you have in your checking determines your interest rate on savings. So right now, our interest rate is between 1% up to 3.5 for the annual percentage yield, depending on which tier you're in. So even if you're below, starting at $0, you can at least get a decent interest rate. You're not getting pennies on the dollar. So if that's something that you are curious to where you would fall, just let us know. We can talk privately about your balances and see what interest rate may be for your account. Because everybody's balances are going to be different, but we could definitely go over that if you have specific dollar amounts that you're curious on. What other questions do you have?
Do you have any products or suggestions for an emergency when you don't have the money? Let's say your furnace goes out and you need 10 grand and you're gonna have to use a credit card, or what do you do?
So we do actually have a fantastic product right now. We have what's called our Shield card. It is a very basic credit card, but it has 0% interest for 2 years. It's full 24 months. So it is a fantastic option for just that emergency. Oh crap, my furnace has died. I have the Shield card though. I'm gonna go use that, and I'm not gonna have to pay interest on it, so I can make those minimum payments without worrying that my bill is going to eat me alive.
You can also maximize that Shield card and do balance transfers. So if you have other credit card debt, you can wrap it all into the Shield card and not have to pay interest on it anymore. I also have another unconventional way you can use it. Somebody is buying a car and they are getting a loan through them, but we can balance transfer a loan even onto the credit card. So they're getting an auto loan at 0%.
Is there a balance transfer fee?
5%.
So one time though.
One time on that total.
And typically that's going to save you more than the interest that you would get every month on it. And we also have calculators for that too. So again, we can go over any specific situation that you might have to see what would work for you.
And we do have options, if you don't have time to come into the branch to sit with us, we do have phone appointments, and we do also have online like Zoom call meeting appointments. So we are available for just about any kind of situation.
And then our 24-hour line is available 24 hours, 24/7, and they can open accounts over the phone. So maybe if you're working days and it's not during bank hours, you can make it in. You still have that option.
Anybody else?
Sounds like
Thank you.
Yeah.